Hi, I'm Josh Brown, here as always with Michael Batnick, and we're ready to play our favorite game. What are your thoughts? Mike doesn't know what I'm going to ask him. I don't know what he's going to ask me. Stick around, let's see what's happening. Mike, I want to start with the Super Bowl commercials. I thought they were awesome. I really liked all of them this year. Is it possible that Madison Avenue is getting better at this, or am I just getting old and focused on all the wrong things? What are your thoughts?
I wasn't really paying attention to the commercials, so.
Well, what are you doing? What are you doing during commercial breaks on the Super Bowl?
Tweeting.
Special mention to Bud Light. I think they did a really good job shaming Coors and Miller about their use of corn syrup in the beer. That probably will work. I don't think I'll drink either one of those. But then someone else was like, well, they just use a different kind of sugar, so it's no difference.
Know what I did notice? The Google ad about hiring veterans.
That was pretty cool.
How many veterans do they employ? I'd like to know.
I bet you they go out of their way to hire a lot.
I hope so.
We have a few. We should probably have more.
All right.
Verizon's ad was really great about first responders.
Missed it.
I mean, that's what these ads should be. I thought they did a really good job.
All right,
what do you got?
Sticking with the football theme, I was thinking that Robert Kraft now has six Super Bowls.
Yeah.
And you think about the toxicity surrounding like the Knicks with James Dolan or the Redskins with Dan Snyder. So obviously,
there are way more than those examples.
The owner is important to like culture and everything like that. What is more important, the owner of a sports team affecting the outcome of the franchise, or the president and the economy?
Oh, which should get more credit / blame? I think that's easy. I think the owner of the sports team, because it's so much more direct.
Yeah, I think so too. But do you think they're analogous at all?
No, I think there are trillions of variables with an overall economy, including mostly things that happen all over the world, that the president really has very little to do with. Maybe the president can rescue the economy from a crisis. I would say that. I would say FDR was instrumental in rescuing us from a crisis. But other than that, the president can't turn the dial 2 notches up or down the way Bob Kraft can.
Well, how about this? I would say that an owner can do more harm than potentially good. There's not going to be an owner that, like Robert Kraft can't start over and reproduce the success that he's had. But yeah. I think that Dan Snyder or Dolan or shitty owners can take their toxicity anywhere and crush a franchise.
Well, but the counter to that is, all right, so Bob Kraft could fire Belichick right now and bench Brady just arbitrarily to sink his own franchise. But you don't think the president can do that to an economy?
I'm saying they have more control on the downside.
The president could hit the nuke button. That's I guess it's hard to answer, but I just feel like it's very intuitive that you're way closer to a sports franchise and there are less variables. Just my guess. I want to ask you about Bill Gross announcing his retirement. So before you even answer, let me just say, arguably he's like one of the most influential fixed income managers, money managers of all time. His career was enormous.
Yeah, there's no argument. Who would even be number 2?
Maybe fixed income Gunlock, but it's a long run.
It's not even close.
It's not even close. Gross was a big deal.
I feel like my dad has heard of Bill Gross.
But now, what are your thoughts on his retirement, and how should we think about his legacy?
The most important bond manager of all time.
And just leave it there? What about all the other stuff?
I think somebody had a good take. I think Balchunas said that his tenure with Giannis is going to be like Jordan on the Wizards. People won't remember it.
People won't remember that he spent 3 years basically
wrecking his big deal.
Fund. There was a Bloomberg headline that I thought put it really well, that he was too unconstrained. In other words, he had built up this huge brand name, and Giannis just said, all right, go do what you do.
I don't know enough about the history of the total return fund. Was he constrained? Yeah, right?
He was more constrained, and that fund, I think, got up to, it was the biggest mutual fund in the world.
It was a top 5 total fund,
yes.
With stocks too.
Yeah, and then they launched an ETF based on it that I think also did really well. But then he was making these really controversial bets, and then the stuff with Muhammad and just like
he was publicly like on the wrong side for a lot of
what
years.
What year should he have retired?
Well,
I would say
hindsight is 2020. So what? 2011.
I'm not saying he should have known.
No, okay. So 2011.
If he went out in 2011, having navigated the financial crisis, but prior to shorting treasuries,
but why would he have retired?
He would have been like St. Bill.
Yeah.
Like he managed money for every major pool of capital in the world, and that was pre the infighting.
All right. So what happened to the recession? Is a potential recession over? Was there never potential for it?
I'm really glad you asked that question. I think that the stock market has become more. I think the economy has become more sensitive to gyrations in the stock market than ever before.
What about maybe? Well, the Federal Reserve certainly has. It feels like.
Yeah, well, and they should. So people like myself included.
Wait, why should they?
I'll tell you why. Because we've never had trillions of dollars in retirement assets betting on the stock market to the extent we do now. We've never had as much corporate compensation for executives in the form of stock options as we do now. All of these trends have been around for decades, but it's bigger and bigger and bigger. And now, and Bank of America Merrill Lynch put out a chart on this that I'm going to share later on the blog. The biggest component to the movement in the University of Michigan Consumer Confidence Index is what did the stock market do? It's bigger than jobs, believe it or not, month to month. It's bigger than gasoline prices. The stock market is dictating consumer spending, and consumer spending is 76% of the U.S. economy. So I think the stock market is now a more important input than any other input.
Fine,
and I think
don't
everyone's
you think
recognizing
don't you think that's very dangerous? That the market falls 60% and Mnuchin is out there saying, "Don't worry, I talked to the CEOs of banks and there's liquidity."
I think let's separate the two issues. Mnuchin has no idea what he's doing. He's learning on the job.
But don't you think that's dangerous? That like we are trying to protect investors from what? Any downside?
I don't think we're trying to protect investors. I just think that people that follow the economy are now reacting more closely to things that are going on in the stock market because whether consciously or subconsciously, they know that the last 3 recessions were caused by market events, not economic events. The blow up in derivatives and housing and mortgage related things caused the last recession. The one before that was A plus B equals C, directly caused by the NASDAQ bubble blowing up. And the one before that was the S&L crisis.
Do you think that...
So these are market crises that become economic recessions. It's not the other way around.
You think that Jerome Powell is drawing trend lines? Just asking.
I think there are probably people within the Fed that are watching things like the 200-day moving average.
Cut it out.
Why wouldn't they?
Cut it out.
Do you know that the Fed pre-2008 had one Bloomberg in the building, and now they probably have hundreds? It's a different world, and the market has never been more important. That's my thoughts. I want to ask you about U.S. stocks versus international stocks. Meb Faber did this really great thing. All his stuff is great. We love Meb. Did this really great thing about the CAPE ratio of the U.S. versus the rest of the world versus the cheapest quartile of foreign markets. And we are now at a valuation premium that is a 40-year record, U.S. versus the cheapest markets in the world. And that could go to a 50-year record, obviously. Right. But what are your thoughts?
I think that we have deserved a premium. And it is a reflection of the last 10 years of massive U.S. outperformance. Do I think we deserve a premium permanently or that we will have a premium going forward? I have no idea, but I do think that U.S. investors should absolutely avoid the home country bias if they can at this point.
Now they should.
Yeah.
Right. So
well, I thought that they should in the last few years. I mean, I don't think that's my opinion of that would change necessarily based on what the market did in the last 5 years.
So I agree with you, and the way you phrased it is perfect. You said U.S. stocks have deserved a premium, but you wouldn't have known that in 1990.
No.
That we're about to go on just a 30-year rampage of huge outperformance.
So I do believe in the cyclicality of international stocks outperforming versus underperforming.
So one of the things I did a post about this, which is that it's not like you get European stocks rallying when the S&P is down. And in fact, Europe goes down more in a negative S&P environment,
yeah, but that's
almost 100% of the time.
But that's not permanent.
What would change it?
I don't know.
What would be a scenario where France rallies hard as the U.S. is falling?
I have no idea. All right. I wrote a post over the weekend about home ownership as it pertained to my experience. And the idea that people say, did you make money on on your sale is so ridiculous.
Like, how did you do?
Because they're talking about your purchase price versus your sales price when you're not purchasing with cash and you're not selling for cash. And all of the variables that go into it.
Well, you had to buy another house after.
But my point is, let's say that I bought it and I sold it for 20, 30, 50 grand higher.
Right.
The bank has a giant claim on that. There were expenses all along the way, taxes, maintenance, whatever.
Right.
So you're like, for instance, you pay a ton in taxes. You're redoing your kitchen now. Are you ever going to make money on your home? Is it ever not going to be a giant cost?
No.
It's probably the biggest cost in your life.
If I were treating it like an investment, I'd fire all the employees. I wouldn't do a thing to it because there's no way you can put this much money into improving things and a buyer is going to come along and appreciate that value and buy it for more. There's no chance.
Right.
So I would do a share buyback if I were running the home as an investment. But people are asking you that question because a lot of them are real estate investors, or they remember their parents being like, "Oh, I bought this house for $8,000 in 1968."
Yeah, I was actually just talking to my friends about this. Like, our parents bought a house for $200,000 and now it's worth $7 million, but that's like
30 years.
Yeah,
later.
it's like 3% nominal. Not including any costs, any taxes, anything like that. That is just money.
But they still came out ahead because if they were paying rent for 30 years, they would not have done themselves any favors.
Yeah, no, I agree totally.
Right. So, but I
don't think it's that cut and dried. Like, people renting gives you a ton of flexibility. You could go wherever you want. So maybe the more money you have, the more likely you can be to rent because you're like, yeah, I'm wasting money, but I don't really care.
But don't you think people just ask you how you did? Like, when you have a baby, they're like, "Oh, the baby's beautiful."
Yeah, totally. I don't think they
I don't think they even want the answer.
Yeah.
You should be like, "Fuck you, I did fine."
Yeah.
Like, what do you care how I did?
Nobody's even asking me because I don't really talk to anybody. I'm just saying if they were to.
All right. I want to get to this last one. I wanted to ask you about, and I don't know if you had time to read the whole op-ed this morning.
I did.
Okay. So Bernie Sanders and Chuck Schumer are proposing, or in the early stages of proposing, a rule that would mandate companies have to invest in their workers, which I don't even know what that means, before they're able to authorize a share buyback. And they're making the point that the stock market is really only benefiting 15% of the population.
Which is not, that part's not untrue.
I think it's to varying degrees,
Yeah.
but fine. How would you even means test that? Like, number one, what would be the concrete guidelines? And number two, doesn't Apple do everything?
So they said in the article, stock buybacks don't benefit the vast majority of Americans. And I tweeted, neither does the stock market, time to shut it down. Like,
okay.
So
that's the nihilistic take.
But they are acting as if companies set buyback policy and then do everything else.
Right.
Obviously, it's like the last decision that they make. It's okay. Now we have profits. What do? We buy back shares. We send dividends out. We sit in cash. We reinvest. We spend whatever. I do think however, they are hitting on something that's important, but they're using this as the boogeyman, and I just don't think it's the right argument.
This is so easy to me. I don't know why people think this is such a complicated topic.
No, it is complicated.
It's not, because the contra to buybacks is let's have another CapEx bubble like 1999. Who did that help? Nobody. The end result of that. Or let's figure out if the federal government will do a better job dispersing those funds. We know it won't.
So this is the bad part of capitalism is that this is just an inevitability.
Is that there are huge winners.
Yeah, it sucks, but what's the alternative? Legislate everything away?
I'll give you an alternative. If you want to promote certain things happening in the economy, think about things like a payroll tax holiday. And don't make it so hard for people to hire. And don't make it so expensive to give workers insurance. And give preferential treatment to corporations over inherited wealth. There are a million common sense proposals that are probably easier to do than means test whether or not a corporation is investing in its people as much as it should. And we don't tackle those things. I'm not 100% sure why. I'm all for stimulative tax policy or tax policy where you're trying to steer a certain behavior in society. But buybacks, it seems like just it's a symptom.
Yeah.
You're not treating the real issue is that there aren't enough high-paying jobs for workers.
Oh, don't you think an easier solution instead of this is maybe just raise minimum wage?
Well, Maybe, but maybe not. I don't know.
What if a company like
I don't know if that's so cut.
What if a company like Walmart? What if there was a rule that if 30% of your employees are receiving the minimum wage, then you can't buy back more than 10% of your stock or something like that? I'm not saying that's a great idea, but
so 100 companies in the S&P 500 will decline by 20% on the day that's enacted. McDonald's, Walmart, anything dollar stores.
And think about all the unintended consequences that we're not mentioning. This is not a good idea.
Yeah, no, I'm not saying I'm not saying it's simple to find a solution. I'm saying that there are easier things that can be done immediately that no one would object to. Like, who would object to a payroll tax holiday for small businesses? So non-public corporations that are hiring get preferential treatment for the fact that they're hiring. Who would say that's bad for the economy or that's bad for Main Street? Like, nobody would argue that. It seems like if somebody would just bring it up, we could do something. This seems like you're worried more about the symptom than the underlying
Well,
problem.
it also just stinks of like politics, right? Like who they're pandering to and just providing misinformation.
You know why that's weird? Because Schumer's New York. That's Wall Street. He's Wall Street senator. So it's actually weird that he's proposing that because he very rarely does things this way. Anyway, what do you got?
That's enough.
I've had enough too. What are your thoughts on these topics? Let us know. Make sure to leave comments in our comment section. We love your feedback. If you're not already subscribed, subscribe, and we will see you soon.